Hi, today I am going to explain how to prepare the bank reconciliation statement. Before go to the illustration, I will give an introduction about the bank reconciliation statement. Usually firms maintains bank account for deposit money and withdraw when necessary, as well as for issue checks and receive checks. For understand current balance of the bank account, firms prepare one bank account in the books of the firms. The bank also maintains the firm's account in its books. A copy of this account it submits to the firm from time to time, that known as the passbook balance, as well as bank account balance in the books of the firm. Both has to be tallied. If both amounts are differ, at the time firm prepare one statement for reconcile the balance amounts. That statement known as bank reconciliation statement. Let's go to the illustration. In the illustration, they may given the balance as per Cashbook. So at that time we have to find out the passbook balance. If they have given the passbook balance, then we have to find out the Cashbook balance at that particular date. So in this illustration, they have given the balance as per Cashbook. So we have to find out the passbook balance as on 31st/12/2007. The first thing they have said, the balance as per Cashbook is 12,500 as on 31st/12/2007 on that date. So first we have to record that balance amount in the statement, reconciliation statement. Balance as per Cashbook, which has recorded in the books of the firm this amount. So this is 12,500. In second thing, it says about the checks issued but not yet presented for payment. So when a firm issue the check, at the time it records in its books as reduce the amount because of it's issuing a check to a supplier. So it's deducted from the cash balance. So we have to add this 900 for find out the passbook balance, because it's not deducted from the passbook because it's not presented for the payment till now. $900. And other one, checks deposited in bank but not collected. When a firm deposits a check to the bank, at the time it increase its bank balance. So at the time of deposit the check, at that time the firm increase its cash book. It add that amount to the cash balance. So it's already added in the cash book balance. So we have to deduct this amount to find out the passbook, because of checks deposited into the bank but not collected. So in passbook the for bank, till now it's not added. $1,200. The next one, bank paid insurance premium 500. In few charges, the firm give few instructions to the bank to pay the charges directly. So bank has paid the insurance premium directly. So from the passbook it has deducted already, but from the books of the firm it's not deducted till now. So we have to deduct the amount for find out the passbook balance. The next, direct deposit by a customer 800. So when a customer directly deposit a check or amount to the bank, it has added already in passbook, but in the books of the firm it's not added. So we have to add this amount to find out the passbook balance. So in direct deposit it increased the bank balance, so we will add the amount. Interest on investment collected by bank 200. In few cases, firm give the instruction to the bank to directly collect the dividend or the interest of the firm. So in this case, bank collected one interest amount on investment directly. So 200. It increased the bank balance, but it's recorded in passbook only. It's till now not recorded in cashbook balance. So we have to add this amount, interest on investment. By bank 200. And last one, bank charges 100. So bank already deducted this amount from the passbook, so we have to deduct this amount from the cash book balance for find out the passbook balance. So finally we have to add these amounts. So calculate and we have to deduct this amount. After that, we'll get the passbook balance. So the passbook balance. As per passbook. In few other questions, they may give the passbook balance as on that particular date, so we have to find out the cashbook balance. So in this illustration, they have given the balance as per passbook as on 31st/3/2007. So we have to find out through the reconciliation statement the cashbook balance as on that particular date. So let's start to record the entries. The first one is credit balance as per passbook as on 31st/3/2007. 2007. So we have to record this 2500 balance amount first. As per passbook, 2500. The next one, the bank charges of rupees 60 had not been entered in the cashbook. So the bank charges of rupees 60, it's deducted from the bank. That means it's already deducted from the passbook by the bank, but till now it's not deducted from the cash balance of the firm's books. So we have to add this amount because this is already deducted from the passbook balance. So find out the cashbook balance, we have to add the bank charges of rupees 60. The next one is, out of the check of rupees 3500 paid into the bank, a check of rupees 1000 was not yet credited by the banker. That means out of the check of rupees 3500 paid into the bank, a check of rupees 1000 was not yet credited by the banker. So 3500 we have paid into the bank, but till now 1000 not collected. So at the time of when we deposit the check to the bank, we add that amount in the cash balance, cash book. So we have added 3500 in cash book balance. So it's not added 1000 rupees in passbook because the 1000 till not collected by the bank. So what we have to do, we have to add this 1000 with the passbook balance to find out the cash book balance. but not collected. Thousand. Next, record. Out of the checks issued for rupees 4,500, checks of rupees 3,800 only were presented for payment. So in this case we have issued 4,500, but the 3,800 only were presented for payment. So the remaining thing not deducted from the passbook balance, but the 4,500 totally deducted from the cashbook balance at the time of issuing. So we have to deduct the balance amount. 4,500 minus 3,800. So 700 we have to deduct from the passbook balance. The next one is a dividend of rupees 400 was collected by the banker directly but not entered into the cash book because of the few of the instruction of the firm to the bank will directly collect the dividend or interest on the investment of the firm. So in this case a dividend collected by the bank directly instead of the firm. So it is added already in passbooks, but till now it's not added in the cash book. So we have to deduct from the passbook balance for find out the cash book balance. Dividend collected by bank 400. The next one is a check of rupees 600 had been dishonored prior to 31st 3 2007, but no entry was made in the cash book. So a check of rupees 600 had been dishonored before the 31st 3 2007, but till now it's not, no entry has made in the cash book, but it's recorded in passbook. So we deposited, but it's dishonored. At the time it deducted from the bank balance, that means passbook balance, so we have to add it. Because we are adding this amount to find out the cash book balance. This one at 600. So first we'll add this amount. 1660. Will deduct this amount. Balance as per Cashbook. If you have any doubt regarding this subject, please comment below, as well as press the subscribe button and bell button so you will get our new and upcoming videos.